Test, test, test. 1, 2, 3, 1, 2, 3, test, test, test. Good morning, good morning. If you can confirm that you can hear me, that would be great. Of course, if I'm not going to get the confirmation, meaning that you cannot hear me right now. Test, test, test. 1, 2, 3, 1, 2, 3. We cannot see the screen. Oh, right. 1 second. Let me check what is going on. Give me, please, 1 second. Is it working right now? Good morning, good morning. Can you see the screen? All right, can you hear me? All right, all good. So I do remember we've had a huge technical problems, issues last week. Hopefully, everything will go smoothly today. I truly believe everything will be okay. All right, we have 2 minutes, so yeah, let's wait a few more minutes. And we will start. We will go through the basic stuff we discussed last week. We will go through smoothly, quickly, and then we will. Then depends on the time. We will go through few details. As I mentioned last time, I'm going to explain a few things. I'm going to try to add a few more useful tools for you. And so hopefully everyone who is participating today is going to find something useful for himself, for herself. I'm not saying that you have to start tomorrow, you have to use all the tools, but I'm gonna be very happy if one of the thing is gonna be useful for you. All right, it's 8:45 a.m. CET. So we are ready to go. Good morning. My name is Piotr, and it's gonna be my pleasure to spend the day with you today. It's a second part. Previous Tuesday, we had an introduction to the basic supply and demand. We had technical issues over the course of the day during the previous meeting. Hopefully everything is gonna be okay today. Let's start with the risk warning, guys. Please bear in mind, trading FX on margin, trading crypto on margin carries a high level of risk, may not be suitable for all investors. You can sustain a loss of some or all initial investments. So please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. All right, we are done with risk warning. So we can slowly start to summarize what we discussed last time, right? It's gonna be I will try to make it fast. in case you have the questions into the particular things we are going to discuss, please feel free to ask them during the presentation. If you have some additional questions related to FX market but not related to the supply and demand, please wait for a break, and over the course of the break I'm going to try to answer them as well. All right, so first thing first, you might wonder, because there are plenty of different colors on my chart, so quickly, whatever you see, doesn't matter the time frame. The red color, either so the red color is related to the monthly chart. Then we have blue color, right? So whatever is a box is a trend line, whatever is, but if it's a blue, it's related to the weekly chart. And for example, here on euro dollar, as you can see, we have big blue box, and it's what we discussed already during our meetings on the YouTube. It's a possible demand zone based on what we've seen to May 2017, right? So it's a blue color. It's a weekly chart. So even if I'm going to switch to 1 hour chart, okay, and if we are going to one day approach this blue box, I'm going to have the idea, all right, from the higher time frame, we are approaching significant levels, significant zone. So in that case, it's a possible demand based on the weekly, right? Okay, then we have green color. Then we have a green color, and green color represents what is going on the daily, in my case, right? Then we have yellow, we do have orange, both represents what is going on from the intraday perspective, all right? So there is two more things I have on my chart. As you can see, blue dotted line always represents weekly open, current week open on my chart, all right? And I have a green dotted lines, and they represent Monday high, Monday low. So that's it in terms of what the different colors means on my charts. Okay, so hopefully that's perfectly clear. I'm trying to have it like this, that on the daily, I'm trying to hide the levels related to the intraday chart, right? To try to have them much more clear, all right? So that's how I see the charts from the colors perspective, right? Okay, now, previous week, previous meeting, we were discussing possible supply, possible demand, right? Why possible? Because as long as we cannot move the market, me, you, we can just guess that, okay, this zone, these levels, they may work as a supply, these and those may work as a demand, right? We can guess based on what we see on the charts only. So if someone is going to ask about the accuracy, supply, demand, are they work 100% of the time? Of course not. Of course not. And last time I've mentioned that if you are going to try to trade each supply, each demand, probably it's not gonna work your way, okay? So we are going to go through the basic stuff we discussed last week, and then we start to focus on the approach, how to try to avoid some bad trades. We are going to talk about manipulation, and I'm going to add a few hopefully useful tricks for you. All right, so let's start with the first setup. And the first one is a Riley, right? Then the base creation when markets have few minutes to make the breath and the markets decide to go lower. So we have Riley, all right? Then we have some kind of the base creation, right? And then significant drop, all right? Now, what is key takeaway from here? Because we don't have to do anything during that process. We have to try to find such a setup. What is the takeaway here? The drop, right, has to take out the previous demand zone, right? So we have to break below the latest demand. That's the base of this setup, right? Riley, some kind of the base drop and the push lower, and we have to take out the previous demand, right? And we just have to find such a setup. Then what is important, once we know where is the original base, we have to see at some point move back towards this supply, right? That's where eventually short might be initiated. And theoretically, we should see reaction at least towards the most recent low. Now, it's not that easy, 1, 2, 3, because very important thing is how market is back into that supply, right? Is it the straight line, which I don't like? I do not prefer this type of the move. So in that case, if it's a straight line, most probably I'm not gonna trade this supply, right? Or market slowly is moving back towards this supply, right? In that case, why is so important to see the slow move back into that supply, right? Because we want to see that on the way move into that supply, we want to see each demand to be consumed. We want to have free way, right? We don't want to be disturbed by the demand over the course of the way to the lower level. What I'm talking about, what I mean by the consumption. All right. So over the course to this supply, right, we have higher high and higher low, right? So by taking out the previous high, right, we are creating here the demand. So I want to see the pullback, right? I want to see the pullback into that. So in that case, I can assume that we took out the orders here. Now, there is another move higher, right? We took out another high. So there is another demand. I want to see consumption. And again, and again, right? Now, with this type of the approach into the supply, the very, very important thing is to consume the latest demand very close to the supply, right? In that case, very often, we are going to see hit retracement into this previous demand, attempt to rally with stop count and rejection at the high based on the smaller time frame. That's what we in details discussed previously. All right, that's what I'm going to try to show you on the chart over the course of the day today. All right, very often it works like this, and very often we are the victims of the stop count, right? Because very often we have in our minds, we have, oh yeah, that was the great entry, market is moving in my direction, nice, I'm going to move my stop to my entry, right? And I got a free trade. First thing first, I'm going to explain again today, there is no such a thing like a free trade. There is no such a thing like a free trade. And usually this retracement is consuming the latest demand. We have attempt to go higher, and usually our stops at the break even at +1 are taken out, right? Then market is going our way, but without us. Business as usual, right? Business as usual. And in that case, with this slow approach, right? If we are trying to short here, the stop, my usual stop from the intraday perspective, we are talking about the intraday perspective right now, it's gonna be the high of the base +1 plus spread for the short side, right? So we can assume that based on the spreads we have here in the Light Forex platform, yeah, we can, for euro dollar, we can make the round number 2, right, above the top of that zone. All right, and based on this approach into the base, my first target is this low. Okay. Any questions? I'm going to add some management rules, but our third meeting next week is going to be related to the management. But anyway, I'm going to take into the consideration this short over here. If the distance between the entry and the stop, which is always 1R, right? So if I'm going to risk 1R and the Possible target, I'm not saying that it's always black or white, is minimum 3R. Of course, it's not that I'm gonna to wait always for 3R. Sometimes we'll have to actively manage the positions. Sometimes it's gonna be more than 3R. So again, it's not black and white, okay? But I have to have a base to think about what I wanna do. So that's my base. If I have a possibility to try to get 3R or more, then I will consider this as a good one. And of course, the way how the market will get back into that supply will determine if that's the second part of my plan, if I want to be in the market or I don't want to be in the market, right? So that's the basic setup for Riley based drop. Okay. Now, opposite is gonna be drop based Riley. So market decided to go lower. Then market is taking the breath. And some guys saying, oh, come on, that was the wrong direction. We have to go higher, right? So we have a drop. We have a base. And we do have the Riley. Now, what is important for me, that this Riley has to take out the latest supply, right? We are going to discuss the details when this particular supply might work out as a demand at the very beginning, but we are going to go through this later on, right? So I want to see this Riley to taking out the previous supply, right? And during that process, I just need to find on the chart such a thing, right? Then I will go through the process, how we are going to get back into that zone, right? What's the level in relation to higher time frame, where we are, and stuff like this, right? So in that case, here, the first phase, we just have to recognize. Then we are waiting for the pullback. And again, same way as in the previous example. If it's gonna be sharp, strong move back here, I'm not sure I wanna buy here, right? I'm not sure I wanna buy here. Maybe after some stop count, that's what we are going to discuss as well, all right? I do prefer to see slow move back into that demand, right? On the way into that demand, I want to see that each supply on the way to the downside being consumed over the course of that move to the downside, right? Okay. Again, same way. In that case, in case of demand, my stop is just 1 pip below. No spread, nothing like this, right? Spread is related to the short side. Here is just 1 pip below, based on intraday trading, right? Of course, that's my personal setups. You have to, if you want to use it, you have to adopt your own rules, right? Maybe you are gonna to feel much more comfortable with 2, 3, or 5 pips below the zone, right? But then don't forget when you are counting, if there is a, so if your distance between entry and stop is gonna be 1R, and with all the pips you are gonna to add is gonna be 14, right? Then the minimum move to the upside, and you have to check if it's a real, right? If you have on the left side on the chart, if you have some possible supply earlier, because if you do have, then you may want to skip. But if in that case you want to see if you have a space for 42 pips move, right? Because we might have 9 pips zone, all right? But you are comfortable with additional 5 pips, right? So in that case, you have to take total, not only the white of the zone. You have to add also what you are adding, how low below the zone you want to have your stop, right? So for now, we discuss Riley base drop, drop base Riley. First 2 setups. And for me, these 2 are very, very useful, much more useful than the next 2 we are going to discuss. But that's my feeling, right? You may find out that the next 2 are gonna be much more useful for you. So whatever we are going to discuss today, then you have to take some time to test it and adopt only things working for you. That's the most important thing. It's not a system you can, I don't know how to say it, you can blindly follow, right? It's not that it's a stochastic crossing the line and you are automatically taking the position. No, it's not such a thing. It might be, all right, that we are going to watch the same instrument. Let's say all of us, we can watch euro dollar. We might watch this euro dollar on different time frames, and we might trade different possible supply or possible demand zones. And even more, it might end up that you are trading on 5 minutes short side and you are good. I've been trading 1 hour demand, I've been good. Or totally opposite. We might be both wrong, right? You may try to trade supply from the smaller time frame. I might try to trade demand from the higher time frame, and both we are going to be stopped out. Especially with current market conditions, it's it's very possible with what is going on right now on the market, right? So again, we will go through the charts. We will try to build the plan based on today's market move during the second part of the meeting today. We are going through the basic stuff we discussed last week, right? But because of the technical problems we had, I have to go through it again. So the next setup, and we are going to discuss both at the same time. They are quite easy. It's the drop, it's a base, and the drop, so continuation, right? But we are not trying to take the advantage of the first breakdown, like the breakout traders, breakdown traders, right? I want to see drop, base, drop, And then where market is trying to turn around, I'm going to wait in that middle zone. And theoretically, we should see continuation to the downside, right? Same things going on here. Riley, base, Riley. Again, I'm not taking the advantage of the breakout. I'm waiting patiently for the pullback. And again, the same rules. The way how we are gonna to make that pullback, if it's going to be straight line or if it's gonna be slow move, right? I do prefer these slow moves instead of the sharp pullbacks. But we might have pullbacks or rallies into the zone, sharp one, based on some market comments, news, and that's a little bit different story, right? That's a little bit different story when market is trying to take the advantage of such events. And we will try to discuss it as well. Okay. So smoothly, we went through all 4 basic setups related to possible supply, possible demand. Do you have questions? And by the way, guys, I'm just watching the chat inside the webinar room. So if you are asking questions on the YouTube, I'm sorry, I can't see them. Please log in to webinar room and ask your questions here inside. All right, we do have a question. If it's if the setup needs to be on the daily. Now the most important thing is right. This possible supply, possible demand zones, they are working on each time frame. All right. Now, if I'm going to check the daily chart, and if I have some kind of the possible supply there, and we are approaching them, right? As an intraday trader, I will switch to 1 hour chart and try to work out with the possible supply demand based on the smaller time frame, having in mind that we are approaching some levels from the higher time frame, right? So I will try to take the advantage of it, meaning let me try to draw for you. All right, and let's get back 1 level higher. Let's imagine that this is possible demand on daily. All right? So I'm going to switch to 1 hour chart, and let's say we are somewhere here, and we are approaching this demand from the higher time frame. I'm going to switch to 1 hour chart from the intraday trading perspective. All right? I'm going to switch to 1 hour chart to check where we are. I'm going to switch to 15-minute chart to check where we are, but my execution and just I'm going to have to say that my execution is on 5 minutes or 1 minute charts, but it doesn't mean that I'm doing the analysis on the 1 minute. My execution is based on the smaller possible time frame. For me, from my perspective, from intraday perspective, to have the minimal distance between the entry and the stop, right? Now, of course, you can try to trade if it's a daily and you don't have a possibility to watch the charts non-stop, right? You don't have a possibility. Of course, that you can take the advantage of this daily possible demand, all right? And you can try to trade based on the daily, or maybe you can switch to 4 hour or 1 hour for your execution. Okay, we are going to discuss the details on the charts. I'm going to show you the way I would prepare myself for today, for example, right? The thing is that trying to trade on the daily, this supply and demand, first thing first, very often, the distance between entry and distance between stop is gonna be quite wide, right? It very often might be 50 plus pips, right? So in that case, if we want to trade 3R, we have to look for something around 150 pips plus, right? And taking into the consideration current euro-dollar market condition, it might be very, very challenging to try to find it. And especially even if we are going to find this setup, based on what happened lately, market is moving 150 to the upside, 170 to the downside. It might be that for me it would be too wide, right? Okay, I'm going to use the opportunity because we briefly went through the basic stuff. So I'm waiting for eventually for more questions, and I'm gonna to use the time right now to mention about our meetings this week, because it's a very interesting week, right? Plenty of central banks ahead. So tomorrow, and I'm talking about the Light Forex Global YouTube channel this time. I'm not talking about the webinar room. Our next meeting inside the webinar room is going to take place next week, next Tuesday. We are going to have a third webinar related to the possible supply and demand, right? But tomorrow, we have at 8 a.m. CET, pre-London Open, live market coverage, as usual, right? Then we have UK CPI, and we are going to cover it live tomorrow as well. We start 15 minutes ahead of the event. So from my perspective, it's 10:15 CET. Then tomorrow, we don't have usual New York Open live market coverage. We are going to cover FOMC live tomorrow. So it's a little bit different. And we are going to meet 15 minutes ahead of the event. So for me, it's 7:45 CET, PM CET. On Thursday, usual pre-London Open at 8 a.m. CET. And Thursday, we don't have usual meeting because of the Bank of England. We start 1:45 PM CET, and we are going to cover Bank of England live. Okay, thank you very much. So we are good with the details here. Okay, so we can slowly switch to the charts. and we will try to go through the basic stuff. All right. So we are going to analyze some majors. So we are going to have a possibility to check the basic we discussed with the reality right now. All right. With the reality. So let's start with euro dollar, especially that we do have FOMC meeting tomorrow. So let's try to go very deep with the analysis into the euro dollar. All right. Especially that the upcoming 2 weeks are gonna be very busy overall. What I mean by that? Don't forget, we are approaching end of the second quarter. So we are almost done with the first 6 months of the year. So for sure, there are gonna be some rebalances within the portfolio managers, right? So we might see a little bit bigger moves, a little bit higher volatility, and it might not be related to what we have on the chart as well, right? But that's a little bit different story. Anyway, in that case, let's start with euro dollar. And actually, you know what? I'm going to totally clean the euro dollar chart. And we will start full step-by-step euro dollar analysis based on the monthly chart. So first thing first, and if I'm going to put the line or the box, and you are not necessarily will understand what is going on, so feel free to ask, right? Why the particular line is here from my perspective, okay? So let's have a look what we have based on this latest price action from the monthly chart, right? Now we are start with some additions, right? In this particular move over here, in this particular move here, here, and here, right, from the monthly chart, what happened? We can treat it as a Riley base Riley, right? We can treat it as a Riley base Riley. Why? Because this initial Riley, this one over here, this Riley here, right? What happened here? We took out the latest supply. Where was the latest supply? The latest supply was here. This particular white candle. It was September 2016. September 2016. Why it was supply? All right. Why, in my opinion, it was supply? We need to switch to red color because we are on a monthly. So be on the track. I will try to explain as easiest way as possible, all right? The easiest possible way. So why I do think it was the supply. First thing first, the next month we close below, so we can assume it was some kind of the short accumulation. But overall, the most important thing here is that from here, we made new low over here, right? So we took out these lows. Even if there was a shadow, we took out the low. So on that rally to the upside, we took out this supply, right? So we had a rally, we had a base, and we had a rally. So first thing first, what we can place here, we can highlight this demand, right? So we had a rally, we had a base, rally. So it was good and smart to wait for a pullback, right? Now, when we are talking about the possible demand, there are many different schools, many different, let's call them educators. So everyone is going to have a little bit different approach, most probably. But in case, if we are talking about the possible demand, right, based on what we've seen on the October 2017, right? Again, we are on a monthly chart. We are doing this demand, which has been taken out immediately on a monthly chart. All right? We took out this demand May 2018, right? We took out this demand, and going further, taking into the consideration the upper shadows, we can consider drop, base, drop this time, right? So in that case, based on the monthly chart, simple this demand, possible demand zone, simple didn't work out, right? So trying to trade this one, we would be stopped out. Okay. Now, there are two important things I'm going to point out right now. Two important things from my perspective. Because of such a move, of course, we have a supply at the top. Now, where is the supply based on your opinion? Well, where we are going to put the possible supply zone? What's your guess? Some may argue that this one, the price action happened on March 2018, right? And again, if that would be true, with supply, I'm not taking into the consideration lower shadows, just body and the upper shadow. But the thing is here, and that's what I'm trying, that's what is very important, and that's what I'm going to highlight. And I would say not everyone is talking about this stuff. We might not see these levels. We might not see this supply. I think that we have to get back into what happened January 2018. What happened in January 2018. And that was the break out of this base after Riley, right? So to be honest with you, I would take, because of this attempt to break higher, and because 5 months later, on May 2018, we closed lower, I would have a little bit different possible supply. First thing first, I would take into the consideration, and that's what I'm calling, and it's very important, and I told you last Tuesday that we are going to cover this time, game of the shadows. And there are gonna be few things today, so please listen carefully. I'm pretty sure few things you saw already, but it might be, for some of you, it might be the eye opener here. Eye opener here. And I'm going to try to prove that thing. Anyway, in that case, because we see that this Riley, the base didn't work out, right? So I'm checking the breakout candle. In that case, based on the monthly chart, it was the January 2018, right? And after such a breakdown, after such a breakdown, I'm taking into the consideration the low and open, and of course, what happened at the top, the close and the shadow, right? So it looks a little bit different here, right? Now, what's going on with this zone, which were supposed to work as a demand? So after the breakdown, it also, we have to consider if something where we were expecting demand, right? Let's draw this thing. So if we did expect demand here, right? And market was strong enough to move through that demand, meaning the supply was much bigger in that place. Right? So immediately we should expect supply where the demand was expected after the break lower, right? So in that case, I would make a little bit of the adjustment. In that case, I would take the upper shadow and the body, and I will work out with this zone as a supply, right? So as we can see here, I will make it a different way. As we can see here, right? Right after the breakdown, there was a 1, 2, 3 attempts to try to go higher, but I assume that because of that breakdown, right, the supply was strong enough here to push that prices lower, right? I'm going to take off this red color of the background. Here, 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 and here, just to avoid situation that if we are going to switch lower, we are going to have a red color, right? Now, because of where we are right now, we have to get back into the previous supply. And if you agree with me, that's what we discussed before. If you agree with me that that was the supply before we break higher here, we agreed that that was the latest supply because we made new low over here, right? So we can call that as a latest, because we are approaching here, as a latest market weakness. Now, probably you've heard many times on CNBC, on Bloomberg, when their guys are telling us, oh, I'm buying this dip, oh, I'm selling this right, I'm selling into this rally, right? And for me, when I heard them before, for me it was okay, but man, tell me where you're buying on this dip or where you are selling into this rally, right? Oh, I'm buying the dip, I'm selling the rally. Now, and that should be for some of you eye opener right now. When we are talking about the supply which was taken out by this rally, right? So that's because of where we are right now. That's the latest market weakness, right? Meaning that this base rally. So this base here failed. So in that case, from the bulls perspective, from the people who are trying to buy euro dollar, we are looking on the monthly chart, higher time frame. We are looking another logical place where they might to try to step in and buy, right? So let's have a look. Now, because it was the latest supply which was taken out, now should work as a demand. So I'm not taking into the consideration upper shadow. I'm taking into consideration lower shadow. All right. Now, that's latest market weakness. And if someone is telling you that he is buying into that dip, you may to try to assume, based on the monthly chart, they are trying to take the advantage of the latest supply, where now, after the breakout here, we might expect some demand, right? And we are not going to discover America right now. There was a demand on November 2018. There was a demand on the February 2019. Demand. We are still working with this demand. All right, we are still working with this demand. So that's why it's so hard for euro dollar to break lower through 111 based on the monthly chart, right? So let's switch lower to the weekly chart. I'm sorry, and because we have to discuss supply here as well, right? We have to discuss supply here as well. Now, if we are going to take into the consideration the breakout of this consolidation, all right? So where is the breakout candle? Similar to this one we discussed previously, right? Is this one. This one, that's the breakout of the consolidation. So that was some kind of the demand, right? It was July 2017. So the same we discussed here. I'm going to take into the consideration lower shadow and open of that month, right? So now you may wonder why for a few months we are in a very narrow euro dollar range. Because where the possible demand and where the possible supply resides right now. Okay. The same way as I explained the latest weakness here. So based on current market level, we are looking for a latest strength, right? That was the strength. And because we went lower, we closed below. So that's where I do expect some supply. So let's switch lower to the weekly. What we are talking right now, we are looking both ways. We are looking for possible supply, for possible demand, right? Whatever your bias is, it's good to have plan B, meaning to try to understand where the opposite side resides, where you may expect some kind of the counter attack. All right. So let's switch to the weekly. That's even better here. All right. Weekly. Where is the, compared to what we've seen to the left, where we are, where was some kind of the demand supply? I think here it's not going to be mistake if we can call this as a Riley base Riley. It's not, I think it's not gonna be mistake. Right? Riley base Riley. Now we are still fighting around these levels. So what is important, that we have a possible demand based on the monthly and we have a possible demand based on the weekly, right? So that's quite important. But the next lower level, it's what you've seen before I cleaned the chart, is here. And it starts at 110, psychological level, right? So I do respect this possible demand based on the monthly and weekly at current level, right? But I do have much more respect for this demand based on the weekly at 110 because of psychological zone at 110. So I'm not gonna be surprised, and I've been we were talking about this, and I've been trying to explain. I'm not gonna be surprised if we are gonna at some point to see spike lower, and eventually some kind of the rally of that level. Okay. Where do we have the possible supply based on this weekly chart? Because we know where the demand resides. So where we have some kind of the possible supply based on the current market level. To be honest with you, it's gonna be very, very tough to find this out. I see something here based on, but we took out this one. So on the weekly chart, On the weekly chart, I'm not gonna be surprised if we are going to take out, this looks like the late 2019, the week ending January 2019, this spike higher here, right? And relation to the yearly open. So that's where the supply resides, in my opinion. The closest one based on the weekly. And switch to daily. The daily we discussed many times. And usually that's what I'm watching at. That's what I'm looking at, looking for the supply demand. I'm looking on the daily, right? And now, because of the latest price action to the upside, again, we discussed it yesterday. Riley, base, Riley, right? So there was nothing extraordinary to trying to expect demand here, right? So over the course of the move lower, to expect the demand over here. And unfortunately, that's what I've mentioned at the very beginning. Because of the current market condition, again, didn't work out. Didn't work out. Let me close the window because of this noise outside. 1 second, please. And it didn't work out again. So what I'm gonna do right now, same with pound. And I've mentioned a few times, I've been hurt by pound lately. So if that was possible demand and it didn't work out, what I have to do? I do expect some supply, but that's the supply. White zone, very white zone. Now we are approaching the time where we are going to discuss some details. How can we try to narrow the range? Of course, the thing is that many times we are going to miss some trades, but trying to trade this supply with such a high stop, I think not necessarily could make sense. So we will go through more details after the short break. We are approaching short break, coffee, tea break. Let's finish euro dollar. So again, instead of trying to take into the consideration this whole day, in that case we are talking about the price action we've seen 5th of June. All right, I'm going to, so that would be, in case that would be, that's based on the daily, that white, right? That white. So I can try using all available tools to try to make it narrow. Of course, it might end up I'm not gonna be able to take the trade, but I can try to narrow it. Now, how can I try to narrow it? I'm going to use this breakout candle, right? I'm going to use the low and the open of that day to make it narrow, right? So that's gonna be my first possible supply. All right? That's gonna be the first possible supply. And I can try to make even more narrow. I can try to make it even more narrow, taking into the consideration what happened during the 13th of June, 14th of June, right? Now, as I mentioned, we are approaching the details, but let's try. The very low, after the breakdown, very low close, 14th of June, right? Compared to the low of the 13th of June and the breakdown level, right? So between here and here, we have some kind of the gap. We can call it as a gap. So very often, market will try to retest this breakdown. Market will try to close that gap. Okay. So what I can try to do is to try to narrow my possible supply. Right? I can try to narrow. Now, around this level over here, around this zone over here, I've got plenty of interesting things. Right? So this is the range, right? We might spend 3-4 days attempting to fight with the top of that range, right? We have the breakdown level. We have the level where markets showed the strength last time. I think if we do expect supply somewhere in euro dollar, I'm pretty sure there is some around 1270, 1276 towards the high from the 14, 1289, right? So that's where I do expect. So from such a wide range, taking into the consideration all available tools I have, I narrow it as much as I could, and I do have my first possible supply based on the daily, right? So let's switch to the hourly and let's have a look what we have there. So taking into the consideration this price action, we do have drop, base, drop, right? But because of the yesterday price action, so that's possible supply based on intraday chart, which was taken out. All right. I do have previous post non-farm payrolls demand, which was taken out here. I do have this breakout post non-farm payrolls candle, right? So suddenly, it looks like I have some supply based on the daily chart, which I narrowed very, very much. And also I do have supply from the intraday perspective, where the part of the supply is included in that supply from the daily chart, right? So I like this stuff. Now we can try to make the final cleaning here. And usually if we are ranging, right, and if we can, in that case we are trying to break lower, but if we can double the range, right, taking into the consideration only bodies, right, only bodies, we see that even if we are trying to double that, we are gonna be around this supply based on the daily. So plenty of different tools we used here, showing that something closer towards 1270, 1280, we may see supply based on the euro dollar. Where can we expect demand based on the daily chart? Based on this attempt to drop and the rally higher, we do have some kind of the demand. Oops, sorry. We have possible demand over here around this swing low. Okay. Any questions? Especially in relation to the market weakness, market strength. The current move on euro dollar is based on what Draghi said. So I'm waiting for your questions. In the meantime, I will finish the basic stuff. So in case we are going to move higher towards this supply at the end, I know where we are, and I'm gonna to look for a possibility to execute based on the 5-minute chart, right? So let's have a look if we have something on the 5-minute chart over there. But it was already taken. So maybe we are going to create some Riley-based drop formation. the market is moving a little bit faster. Yes, that's true, but because of the Draghi, right? And I know it might be, some of you might be skeptical, but it's not the accident that Draghi has 3 appearances around the FOMC, right? So he had the appearance yesterday, today, and tomorrow as well. So he will, in case of the euro dollar rally, he will try to, make the verbal intervention. So the same way we can try to measure where we might expect eventually euro dollar, if we are going to go lower, where, right? Probably when we are trying to double that range, we have this intraday possible demand over here based on drop base rally, right? But I would be very careful with this demand. Why? Because it's intraday, market may want to look for liquidity. I do expect some stops below this level, and I would rather be careful and patient and wait for eventually intraday stop hunt, right? And eventually from the bull's perspective, that this type of the move, right? And we are going to discuss game of the shadows, how I'm calling the next part of our meeting. We are going to discuss swings and how we can use the knowledge we are going to get in relation to the possible supply and demand, and if we can take a little bit, if we can take the advantage of this and to be a little bit better off. Not always, but sometimes, right? So if there are no questions, let's have a short break, 10 minutes break, coffee, tea, right? Then we will cover the game of the shadows. Then we are going to have the lunch break. And then based on what we discuss over the course of the morning meeting, we are going to try to implement during the New York Open, and that's gonna be it. So we are on a break right now. You are more than welcome. Thank you. You are more than welcome to join me after the break. Okay. So it's time to start the second part ahead of the lunch break. And then again, after the lunch break, we are going to try to implement what we discussed here during the New York Open. Just few charts. All right. So what we are going to discuss here, we are going to talk what I'm calling game of the shadow. We are going to discuss swings but I'm going to add something special. I think that's what I discovered. So just a reminder, I can't see the chat on the YouTube, so in case you want to ask some questions, please join the webinar room. Let's start the game of the shadow. Now, there are many different schools, many different approaches into the swing trading. I'm going to share with you the mine own. Few things we are going to discuss right now, it's my own observation. Of course, some of the things we are discussing are not my own. I learned from someone, but here, in regards to the swings, the details I'm going to share with you, even if they are somewhere, I haven't seen them, it's my own observations. That's quite important as well. And probably, when we are going to discuss these things, it's going to be eye-opener for you, and you are going to start to think, yeah, I've seen this plenty of times. I've seen such a thing plenty of times. Anyway, let's go and check what we are talking about. So we are going to discuss swings. Let's switch to the smaller time frame. I need some space. We are too close to. Anyway, let's try to visualize. Swing high for me we can do it a different way. Swing high for me is something like this, right? So we have a high, we have a higher high, lower high, right? That's the swing high for me. Some schools are saying that you have to have, before the higher high, 2 candles, right? High, high, higher high, and 2 candles to the downside to confirm the swing. For me, this is enough to call it swing high. Now, of course, the question is of current price action in relation to the, not the latest, but the previous one candle. But that's what we are going to discuss as well. And opposite to the swing low, right? So that's the swing low. So let's have a look what we have on the charts before we'll go further. So let's grab 1 hour chart. And let's have a look where we are. So starting during this whole move to the downside. So we swing high, swing high, swing high. Next one, the most visible, another attempt to swing high. Another one and another one. Swing low. Attempt to create swing low over here. Attempt to create swing low over here. Attempt to create swing low over here. Another one. Another one. Another one. Another one. Okay. Now, of course, the swing low over the course or during the falling market got the completely different meaning than the swing high and opposite, right? The swing high has a completely different meaning than during the bull market than the swing low, right? And the best example is the current swing high on the Bitcoin, which has been taken out almost immediately, right? On a daily chart, as far as I remember. But anyway, so that's how it looks. And for me personally, the validation is for the swing high. The validation for me is when the falling candle close 50%, is trying to engulf 50% of this one candle, not the highest one, but the pre-high candle. So 50%, that's valid. But I'm going to talk to you in regards to the swing high in relation to the possible demand, possible supply. So not necessarily we are going to be interested in this 50% I'm discussing right now, because in many cases, having in mind what we are going to talk right now, trying to be sometimes a little bit of the front runner, I'm strongly in opposition to be in the front runner very often, but in some cases trying to be the front runner, especially if you know what you are looking at, if you know what you are looking for on the chart, might be very useful. Okay. So, what kind of the secrets are behind the swings? The most clear swing, the book example would be the one that if we are going to take into the consideration the candles one before and one after the high, the highs of these candles are equal. Now we might have here two different examples which are important from my perspective. All right. Hopefully you already spotted the difference. What is the close of the candle which made the high, right? And that's gonna be key thing here. That's gonna be key here from my perspective. It might work completely different for you, but at least I'm gonna to share with you what I'm using and what is working for me in relation to the supply demand. All right. So is the close of that candle which is making the high, right? I'm gonna be short hunter. I'm going to hunt for the short position in case of this example, where the close of the candle which made the high, which the close is below at least the high of this candle. So let's make it again. We are going higher, and then we are creating, we don't know if we created the high, right? And we have the close like this, so just below the high, or better, we have the close below previous candle close. All right. And what is more important, that if I'm going to see this type of the price action, and if we are around this possible supply from the higher time frame, I'm going to wait for open of the next candle, rally towards this high to take the advantage of the short opportunity. Now, don't get me wrong. We are going to see plenty of examples like this on the chart, but I'm only interested to try to be front runner in case of the swing creation, in that case inside the supply, around the supply from the higher time frame, right? So let's check the chart. Let's check the 15 minutes. There should be more examples. Where we have some we already took out. I'm trying to find the examples based on the current market situation. Okay. I got it here. We are talking about this intraday demand based on this post non-farm payrolls Riley, right? And I'm going to switch lower and we are going to discuss these things. Because I'm talking about the smaller time frame, right? Don't forget. So we have the possible demand based on the hourly post non-farm payrolls Riley. Let's switch to 15-minute chart. Let's have a look what we have inside that zone. If there is anything, I'll try to take the advantage of. Here. Here, right? Why here? Because of the close of this candle, right? We made new low, but we close compared to the previous candle. Right? Above. So the idea for me, and because we have also different things, right? We have demand based on the intraday and daily chart, right? Green color as well. We have a lower shadow, some kind of the demand, and especially here because of the close, looking for the low from the previous candle, 1272.1. That where I would like to buy the low over here, of course, plus spread 71.08. I would like to be filled based on the price we've seen here, 72.1. The low here, 71.8. So there was a possibility eventually, but what is the next important thing? My stop is not based on that swing. My stop is still based on the demand we've seen here on the hourly chart, right? On the demand we've seen here. Okay, so I would trade out this one from the 15-minute chart, but my stop would be here plus 1 in that case, right? So if there is a, let's say, 1254, 1253, right? The open was, so it would be something around 18 pips, right? Now, the key important question is, if I would take this based on the 3R ratio we discussed during the first part of this. So the question is, going back into the 15-minute chart, right? Seeing what I see here, taking this trade, if I have the space, if I'm going to have 18 pips stop, if I have a space for 54 pips Riley, right? So let's have a look what we have. That was the non-farm payrolls Riley over here. right? So what we have, how we are, especially how we are moving towards this demand. So we have rejection, right? Breakdown, right? Pullback consumed, right? Another breakdown, pullback consumed, right? So in that case, it doesn't look bad, right? So meaning that based on what we discussed during the first part of the session, that would make sense here, right? Because theoretically, we should have a chance to retest 1335, 1340, right? So based on the 70, it's like 60 pips to the upside, some kind of the also range possible, right? The only one thing, and we were discussing this in details, the only one thing it would make me scary, and in that case, and I wouldn't trade this because of some kind of the hesitation, would be just not to trying to confuse you, but we were talking this stuff very often during the previous week. It was this supply base on the daily chart, right? It was this supply base on this, and it was rather looking for a short opportunity, right, than looking for buy opportunity. And if you are going to get back into the archive section here on the Light Forex Global YouTube channel, we were discussing this also during the non-farm payrolls, right? So that was rather the short opportunity than the buying opportunity. But anyway, that's how I'm approaching, right, the decision point. Let's get back